Mortgage loan originator with Fairway Mortgage. And I'm here to talk to y'all this morning and answer your questions about the home loan process. So as Demario said, once, if you have credit issues, once you got your credit straight, then you'll come to see me to get what we call pre-approved to purchase a home. So I did, pass out a handout, but I'm gonna pretty much do like Demario did and kind of do a Q&A session, type session, because this information here is really just for your own knowledge, you know, for you to know, you know, what you need to do and not do, what documents are required that I'll be asking for as we go through the pre-approval process. But it's just, basic information. The basic loan programs, I discussed on the first page. Usually, most of the people in our area or in our market, as we real estate people will say, will qualify for what we call a FHA loan. That's probably the easiest and most basic loan that most people qualify for. The minimum credit score required will vary based on lenders. At Fairway, our minimum credit score to be approved for FHA loan is 600. This loan is also a good loan for first-time home buyers and people who have limited funds for down payment. I do offer down payment assistance with any loan products we have. As far as the documents that I will need, basic documents, your government ID, which could be a state ID, your driver's license, or your passport. I also need your W-2s. If you are a W-2 employee and receive pay, you need your W-2s for the last 2 years, bank statements for the last 2 months, 30 days of paycheck stubs. Those are the documents that I'll need to get the pre-approval process started. You'll also have to have a 2-year work history. It could be different jobs or different employers, but as long as you have a 2-year period, if there are any gaps in your employment, we'll have to explain that to the underwriter. So we'll do what we call a letter of explanation to explain any gaps that might be present in your employment history. And we also need 2 years of residential history. If you live with a family member and you're trying to purchase a home and you've been living there rent-free, then we'll do a letter of explanation to explain that you've been living rent-free. If you currently own a home and you're trying to purchase a new one, either y'all own a home already? I know Robert T does. So let's say, I'll just go through it. If you currently own a home and you were trying to purchase another house or upgrade your home or downsize or whatever the case may be, then there are additional documents that we would need in order to make sure you qualify for the purchase of a new home. For people that are self-employed, do we have anybody that's self-employed? Yes, okay, so you would follow the self-employed 1099 borrowers list as far as pre-approval documents. Still the government ID, still 2 years, well, we need 2 years of your personal and your business tax returns, all schedules and all pages. And the reason we ask for tax returns is because when we're qualifying you for a mortgage, if you're self-employed, most people that are self-employed write off a lot of their income. That actually can hurt you when you're in the home buying process, because we have to take what you report as a profit, or if you report a loss, we have to calculate your income based on what you actually report on your Schedule C. So I tell people, if you're self-employed and you're looking to buy a home within the next 2 years or 3 years, like for those 2 years that's coming up, try not to write off as much of your income, because that's what we use to qualify you when you're self-employed.
Just to clarify, writing off your income meaning what?
So when I say writing off your income, that means like deducting your business expenses. You know, a lot of people deduct mileage. Some expenses we can't add back. Mileage is one of those. Depreciation we can add back. But let's say you deduct supplies, or you deduct office rent, things of that nature. There are certain expenses that you deduct that reduce your tax liability when you're self-employed. So deducting those expenses actually decreases the amount of income that the business has earned for that year. So it could potentially hurt you for qualifying when it comes to a house if you deducted too much.
Basically, like she's saying, so you make 200K, you done wrote off 150. So she can only finance you based on the 50 that
Right,
you end up saying that you only made.
Yeah.
Right.
Right.
So that means that's gonna qualify you for way
That's
less
why it can
if
hurt
you
you.
qualify at
Yeah.
all because of your DTI might be higher.
Right,
Like I said, lots of math.
right, yep, it is a lot of math. Another thing I want,
What it like, for me,
mhm,
okay, I got a full-time job,
okay,
but I do have my own business. But my main source of income is my job, my full-time job.
That means you have a W-2
so
income.
you have W-2 income.
Yeah.
So, I don't know if I want to say.
It's not as bad with
While
the-
you being, while
okay.
being recorded. No,
I
okay.
said.
There are situations like if you're W-2, then don't tell me you self-employed.
Mhm.
But it also depends on the type of loan product that you are qualifying for. And over here in West Baton Rouge Parish, rural development, a lot of these houses on this side of the river qualify for rural development. With USDA, we're required to look at tax returns. So that's where that may help you. You might wanna look at something that's just FHA only, where we can only use your W-2 income. But if it's a program, even with some of our down payment assistance programs, it's based off of your taxable income. So if it's taxable income, then we have to look at your tax returns, and that's where that will hurt you. As far as
Because
qualifying.
he will be reporting that
Right.
to the taxes, so it's gonna fall.
Right, so that's why I would say, like, if you know you're gonna buy a house within the next 2 or 3 years, try to minimize those write-offs, because we have to deduct that based on the loan product or the down payment assistance program you're going for. Do's and don'ts. This is where a lot of people get caught up in the home buying process, cause they do what they're not supposed to do. So, here are my do's and don'ts. Do continue to pay all your bills on time, especially those bills that report on your credit report. Again, like Demario said, that will help your credit score. That's why we want you to continue paying those, but it'll also show me as a lender that you're responsible with your credit, cause you're making your payments on time. So you wanna make sure you don't have any late payments or any judgments pop up on your credit report. I do want you to submit your documentation as soon as possible. I say within 24 to 48 hours. I'm one of those lenders that actually pre-approves you in the beginning. Like, there's a difference between a pre-qualification and a pre-approval, and a lot of people get that mixed up. I check and verify everything up front, because what I don't want to happen is for me to say you pre-approved and Sheena take you shopping for a house, and then I haven't checked everything, and then when we come back and now you under contract and we on a timeline, and this is where I find out, oh, you got $50,000 in business losses. I know all of this up front, so when I issue your pre-approval, it's an accurate estimate of what you qualify for as far as housing.
So you let them know how much they qualify for in the beginning.
Yes.
Okay.
And I've already verified
And then
employment, I've already looked at your bank statements and know how much money you have in your bank accounts or in your 401k account, so I know what assets you have. Like, all of that plays a role
I have no
in
assets.
how much you can get qualified
I'm not
for.
there yet.
But yes, I check all of that up front, because a lot of people, a lot of lenders, if they don't do that, they just see that you work, you have a little bit of money in the bank, and okay, you pre-approved, and they'll tell you for whatever amount, but again, your pre-approval amount is based on your debt to income ratio. So it's a lot of math involved in my job, because I have to qualify you based on what your debt to income ratio is and what the guidelines are for the particular loan program
Can you
that
explain
you.
what debt to income is for?
So, yes,
Yeah.
so debt to income is the ratio that we use as a lender to tell us how much house you qualify for. And your debt to income ratio is calculated by taking your monthly debts that you have to pay, house note, car note, credit cards, and divided by your pre-tax income, which is the money you earn before taxes are taken out. So once you take the amount of debt you have and divide that by your monthly income, then that gives us your debt to income ratio. You really wanna try to stay, 35% is a good average. Some programs allow us to approve you for more than that. I think the highest I've seen an approval on was like 57%. But it depends again on whether you have assets, like how much, you might have in a 401k or in your bank account. A lot of that stuff plays into it. Taxes and insurances even play into that ratio. So if you pick a property that requires flood insurance, that costs more for you as a borrower, so your debt to income ratio is gonna be a lot higher. So all of that stuff plays a factor into getting you pre-approved for a loan product. Other do's and don'ts, if you have money in your account, I've seen this a lot, unfortunately, where people get their pre-approval and then they wanna go spend all the money that they had saved, or they wanna start buying furniture, or they wanna, go buy a brand
Get a
new car.
loan for the furniture.
Right, or go get a loan. Like I don't suggest that you let anybody run your credit during this process. I know things happen. If you have a situation where, I've seen this before too, where somebody's totaled a car and they in the middle of the process. As much as I hate to say it, before you go to the car lot to buy a new car, come talk to me first. Because you may just have to wait until after you get the keys to your house to go and get the car. Because that, again, a new debt is gonna show up on your credit, because we do pull credit again before you go to the closing table. So if you've done anything to your credit, or when added any extra debt, we gonna know about it. And if you unfortunately do that in the process, and we pull credit at the end, right before closing, and it shows that you no longer qualify for that product, then guess what? You won't be getting the house. So it's very important to be open and transparent with your lender and your realtor. Just help us help you, basically, is what I tell my clients. Help me help you. Be transparent, let me know what's going on. I'm not telling you how to spend your money, but I'm telling you what you need to do to get in the house. So if you look at it that way,
I know when I was in the home buying process, I couldn't purchase nothing.
Right.
At all.
Right.
And couldn't open up any loans.
No loans, don't co-sign for anybody,
Mhm.
like, don't do
They trying to
anything
get you
that's
in the
going
house.
to impact your credit, because it will have a negative effect if it's too much.
But right after that, I went straight to the car lot and
Oh,
wrote
yeah. As soon as you leave the closing table and got keys in hand and signed your paperwork, you go
Get
straight
your-
to the car lot and get that Camaro.
You gonna get
We don't
it.
care that
I don't know
money.
how, but they
Right.
say your house don't show up for so long, so go ahead and get what you
So
need to get.
usually most houses, after you close on your house, it's 30 to 45 days before your first payment anyway.
Yeah.
So yeah, it could take a month or a month and a half before your house mortgage even reports on your credit.
And they've already gotten your credit where you need it to be. So all
Right.
they gonna see is that credit where it need to be when you go get that new car. They ain't gonna see
Exactly.
that house yet.
Exactly.
So
And
you got
honestly,
two
they-
things in one.
But honestly, the car, when it comes to buying cars and buying houses, it's totally different criteria. Like you can go buy a house, they don't care if you got a 580 credit score. They gonna sell you a car, but you can't get a house with a 580 credit
Right,
score.
right.
So it's
That's why they
just
say you get
different
that house
factors, right? Depending on what it is that you're trying to buy. Don't change banks, don't close your bank account, don't open new bank accounts, because when we source these funds that you tell us you have to close, then you wanna deal with that particular bank account. If you have to change accounts or change banks, then just talk to me as your lender about that. As far as deposits outside of your payroll deposits, we do have to explain any non-payroll deposits if they're so much more, like if they're higher than, I think it's 50% of your gross monthly income. So if it's a huge deposit, let's say you have a side business, you got a W-2 job, but you got a side business and they pay you through Apple Pay or through Zelle or whatever. If that's on your bank statement, I'm going to have to ask you to tell me what those payments are.
I remember.
Every last one of them.
Every last one of them. Yes, every last one of
I
them.
had
You
to
have to
explain some
explain
cash
all
apps.
of this. If you cash app your coworker to go
I
buy
had to
lunch,
explain them cash apps.
or your coworker cash apps you to pay for lunch because you running and picking up lunch that day, what was this cash app for $55? Like, I need to know that. So and it's not me, it's underwriting purposes. Like, we have to make sure, and the government basically, not me or my company, but the government has to make sure there's no money laundering going on in these transactions. So it's not that we're like being all in your business, we just doing our job, you know, and we have to document and source any funds that you have that's going toward this transaction. You can receive gift funds if you have a wealthy, you know, a rich auntie, like they say, that wanna give you $10,000 to put as a down payment on your house. There's a process we can go through for you to get gift funds. If you have a retirement account, you can use, most people don't know, you can use your 401k or your retirement account to, well, if you don't work for the state. Cause the state is different, like y'all gotta quit or retire to pull y'all money out, but like most private companies, if you have a 401k or a retirement account, you can use that as funds for down payment. When Sheena come up here, she'll explain to y'all that you can ask the seller to pay closing for you. You can ask for seller concessions, and that goes toward the amount that you have to come out of pocket. Don't make any major purchases. I think I already covered that one. And don't quit or change jobs. Please don't quit or change jobs in the middle of the process, because that starts our clock all over. You have to wait to get paid, paycheck stubs, because we have to have 30 days worth of paycheck stubs. If you switch jobs, you gotta work for almost 30 days before you get your first paycheck. So that means you'll have to wait even longer to get 30 days worth of paycheck stubs. So please don't quit your job in the process. I think that basically covers everything I kind of wanted to go over. As far as down payment assistance programs, I understand that people need down payment assistance. I do, our company is set up to work with the programs that the state have, but I've been helping a lot of people with multi-state programs that we have, that our company offers. Some are forgivable, but most are repayable, but you can get up to 5% in assistance, which can add up to a lot depending on, you know, the loan amount that you're looking to get. Some do come in the form of a second mortgage, which means you'll have a smaller second mortgage payment, but it alleviates you having to come to the table with a bunch of money up front. So it works for some people. I guess it just depends on your unique situation. And I do want to stress that even though down payment assistance is offered, sometimes it's not always the best option, because those programs, they take their fees up front from the money that you're getting. So that's less money you're getting off top. And then they also dictate the interest rates. So where, you know, if you were bringing your own money to the table or just working with strictly seller concessions, we could kind of, you know, negotiate interest rates. But if you're using a certain program, then they dictate what the interest rate is for that program and for that second mortgage. And most of these programs, the second mortgage is 2% higher than whatever the first mortgage interest rate is. So it's not always beneficial. I'm transparent with my clients. I like to let people know that up front. So every, you know, we visit that on a case-by-case basis. That's pretty much all I have for home loans. Do we have any questions about getting pre-approved, about the process?
And this is just for the video. Can you be on SSI and still get approved for a home?
Yes, you
That's a good
can.
question.
Yes, you can have Social Security income as your only source of income and still qualify for a home. It depends on the amount that you get, what you qualify for. Again, debt to income ratio, all of that stuff plays a factor. But I have qualified people that just get Social Security income, or maybe have like a small, you know, retirement or pension fund or something like that. We can also count child support for the people who receive child support. If you receive monthly child support on a regular basis, and you can show us a payment history over, I think it's 12 to 24 months, at least 12 months, but I don't know if they go as far as 24 months back. But if you can show us that you receive it on a regular, you have a court order for it, we can count child support as income in qualifying you for a house. If you are a veteran, like myself, I'm an Army veteran, but if you receive disability from the military, you can use that to qualify for a house. So there are all different sources of income you can use to qualify. If you're not sure, ask, and we'll find out if it's a source of income that you can or can't use to qualify.
Any other questions?
All right. Well, y'all, my contact information is on the back, so if y'all think of anything later on, specific to your situation, feel free to call or text. I'm always available to answer questions, that's what we're here for.